JP has garnered a whole lot of followings, and various other institutional investors are looking favorably at JP, as well as, of course, Wells and Citi as well. But as I mentioned, I mean, we are extremely cautious about this runaway number, because I don't think it's sustainable over the next 2 quarters. Interest rates are extremely high. There is an absolute possibility of us hitting a recession in the US. You're also kind of looking at a very large pented up default rates coming our way in commercial property. So when you look at all of that, I'd be a little bit of a hold rather than jump in and buy as of right now.
In the sector as a whole, or for those particular names?
Predominantly for the US lenders. You see, the US lenders have not been able to diversify outside. I mean, if you look at Goldman, if you look at BlackRock, if you look at some of the assets that they've gone into, they've been able to kind of hedge themselves. But JP, Citi, and Wells Fargo, limited. So the only other avenue for growth right now is transaction banking, payments, and a little bit around the fee income that they're looking at. None of this, that would be very exciting. So if the stock is under-evaluated, I may want to get in and bet big, bet long, but none of these stocks are that attractive. So it's a bit of a hold for us.
Right. I've got to ask you then, because, if you're not liking the financials, if you're not liking, the large money center banks all that much, what's your take on the regionals? Because this is, a source of much contention amongst, I suppose, the investment community and predominantly the value end community that, it splits the bulls and the bears right down the middle. Because if you're bullish, then you'd be buying up these regional banks at these incredibly depressed levels. But if you're bearish, you're thinking some of these are going to collapse. So how do you play that space?
Absolutely spot on. We are concerned. In fact, we are almost I dare say certain that a lot of the mid-sized banks are going to take a bit of a hit. We've been tracking 8 to be exact. All 8 of them have an extremely high exposure to commercial property within the US. So that's a very large concern for us, as well as, of course, for the Federal Reserve. So I don't think this is going to go away till they're arm twisted into either consolidating or amalgamating with the bigger ones, which is easier said than done. So the watchdogs now are coming about, monitoring risk from a very, very, very microscopic view, saying, what is the exposure? Where is your net interest margin?